Hey guys, welcome back to another episode of We Talk Money, the show that is all about answering your questions about money, investing, personal finance. And I couldn't think of two better people to have here to help co-host this show with me. My name's Chris Dunn. I'm an entrepreneur and investor. I'm also here with Nikki, who is a certified financial planner, and Travis, former hedge fund pro investor turned proprietary self-investor. Got a lot to talk about this week. So a lot of crazy stuff happening in the world. We've got viruses going crazy. We've got celebrities unfortunately getting killed. We've got markets that are in really volatile states. We've got Bitcoin that's looking pretty bullish.
Obviously, we feel for everybody that's sick with the virus and Kobe's family.
Yep.
And all of that. But
so, yeah, let's just dive in. First thing that we've got on the docket is the Bitcoin halving's coming up, and I just keep getting a ton of questions about pricing models and how to value this stuff. And I was kind of curious, so I reached out on Twitter and I asked you guys, if Bitcoin were to hit 100K, what would you do with your long-term positions? And this is interesting because I know whenever I think about Bitcoin and investing in Bitcoin, I have different time horizons and I have different capital buckets for this. But as of right now, we're just shy of 1,000 votes. And it looks like about 20% of you guys said that if Bitcoin hit 100K, you would hold everything. You would hodl everything. Where about 44% said you would sell some or all of your Bitcoin for fiat currency. It could be dollars, euros, yen, whatever. About 28 or 29% of you guys said you would sell for physical assets. And then I asked for some others, and people were dropping comments in here like, buying farmland, or, dollar cost averaging some out, or, sell some for land and precious metals and different things. So pretty interesting responses. And my question to you guys is, well, if Bitcoin did hit 100K, what would cause that to happen? And would you even want to sell your Bitcoin at those prices?
very situational, obviously. I mean, if Bitcoin is taking off because something's happening with fiat and we're having super high inflation, then that might be a cause to pause and say, okay, do I really want to go into fiat right now?
Do I want those dollars,
Yeah,
right?
exactly.
Or are the Satoshis more practical at that point?
Exactly. You have anything to add to that?
Yeah, I mean, a lot of it does depend on time frame, because I do think there's a fundamental case for Bitcoin 100K. I just don't think it should happen like in the next 6 months. Like it's possible it will do that, but if it hit 100K in 6 months, I'd probably be selling some into that parabolic top. But I think longer term, if you've got your longer term bucket for Bitcoin, I think like 100K, there is a fundamental case to be made that it can get there within, say, 10 or 15 years. So
yeah, and I guess there really is like two ways that could happen. To your point, Nick, about if there's something with the economy, right? If there's like hyperinflation in the dollar, or there's some kind of economic crisis where Bitcoin becomes the flight to safety,
Or the stock market selling off because we're seeing that negative correlation.
Yeah.
That's probable.
Absolutely. Or is it like 2017 where it's a speculative bubble where people are buying based on the greater fool theory, right? They're going to the Bitcoin ATM at their mall or something, just hitting market buy on Coinbase because they heard that, an article that said everybody's getting, what was the headline? Everybody's getting laughably rich except you. You guys remember that?
Yeah.
So like if it's a speculative bubble, then, obviously I think the right play is to sell and then have more capital on the crash.
I'm going to swap into Dogecoin, all of it now.
Boom. Wait, you haven't already done that? Or I guess the other thing is like, okay, if there is a dollar crisis or some kind of global economic crisis and you're sitting there and you're going, Bitcoin is worth 100K nominally today, but like really what is the dollar going to be able to get you in the future? So that becomes a pretty interesting dilemma.
Mm-hmm.
Yep.
At that point. And yeah, Trav, to your point too, like talking about timing, I think is a really big thing, right? And this is an article that's gone around. There's this guy on Twitter, Plan B. He's also been interviewed by a few different guys in the kind of the pro investor space. And he was talking about the scarcity and stock to flow ratio. So if you guys haven't read the Bitcoin Standard, this is just a really great book for talking about like the history of money and making a case for Bitcoin as a global reserve currency. And I think it's really fair and balanced. But one thing it talks about is stock to flow ratio and how you can value this stuff. And really what stock to flow ratio is looking at the current stock, right? The current supply in a market. So like gold, there's 185,000 tons. And then what's the flow? What's the new supply that you get every year? And then when you look at that, it's like new gold is mined at about 1.5% every year, where platinum, it's like there's more flow than's coming in of the existing stock. And, if you look at like the amount of dollars or other fiat currencies that are being created, it is at a much higher pace than Bitcoin, right? Because Bitcoin supply is fixed into the future. And with the halving coming up, that is inherently bullish. And I'll link this up in the show notes, but the long and short of it is there's some valuation models that we can use here. And if you just look at like a log chart of Bitcoin's price over time, you can make an argument for the next halving somewhere, 50, 60K per Bitcoin. But again, there's a lot of what ifs and assumptions that go into this. But over time, if this stays true, if this projection remains valid, then that's a really kind of reliable way, I think, to value it over time.
What's interesting to me is how resilient Bitcoin has really been throughout this past, 10 years or so? Because we've been seeing bubble after bubble, right? Or I won't call it that. I'll call it cycles. It's essentially been, cyclical. And even though Bitcoin is down a lot from that 20K top, it's still holding up, and it's just being resilient, and the price is being resilient.
Yeah.
And I feel like that is, and this is just me, like my opinion, I feel like that speaks volumes for
Absolutely.
Where we're at in the current sentiment around Bitcoin. Is everyone's like, oh, it's going to die, it's going to go to zero, you're wasting your money, and all of these different narratives that come out about it. But I don't know. It's pretty resilient looking to me.
Yeah, it's the honey badger.
I got caught up, I think, 6-7 years ago when I was first thinking about Bitcoin. And I actually own Bitcoin at a pretty low level. I think I bought my first Bitcoin lots around $200 per BTC. But I bought and sold it along the way. But one thing, I was very, very critical of it early on, because I was thinking of it as a replacement for fiat. And today I see that differently. I don't think that it has to, for Bitcoin to exist and thrive, I certainly don't think it has to be a direct substitute for fiat money. To me, it's as simple as scarcity. It is, I don't care whether or not it's going to ever be used as money. I do believe it's an asset, and I believe it's a scarce asset, like you showed with the stock flow stuff. They're not making more of it. They're certainly going to mine out the rest of the 21 million, but that supply is going to stay fixed while the supply of fiat currencies globally continues to rise. And so it's like, a very rare painting, or, some kind of like, farmland or whatever in a good part of the country with great soil, right? It's an asset that's scarce that they're just not going to be able to make more of. So to me, I don't really care whether or not it's ever going to be displacing fiat as a medium of exchange, but it's a scarce asset, and I think that can be very valuable.
And to add to that is the fact that it's more of like a hybrid asset, is the way I think of it. It's not like Apple stock where you're just stuck with Apple stock and it's just Apple stock, right? Like if you want to exchange it for something, you have to sell your stock, you have to get the money out of your brokerage account, and then you got to transfer the money and do all that.
Like you can't buy a car with Apple stock. No,
you have to do things to be able to do that. But with Bitcoin, it's like a hybrid asset. Not only does it have, the ability to be able to use as a medium of exchange, meaning I can pay you for services or products or whatever by just sending you some Bitcoin, but it's also sitting and potentially appreciating as an asset for wealth creation. So to me, it's multifaceted.
And not to beat the dead horse, like we've talked about this in recent weeks a lot, but the negative correlation to stocks, again, we're seeing it now with this the sell-off in the markets we're seeing this week. Equity markets down, Bitcoin up.
Exactly.
And that persistence of the negative correlation makes for a really interesting property of this asset.
So let's talk about what's happening. So if we just look at a weekly chart here, we've got a little bit of a pullback. If we look at kind of year-to-date performance, we've still got the S&P up about 0.5%, NASDAQ around 2 or 3%, Russell's down a little bit. So kind of a mixed bag since the beginning of the year. Why is the market pulling back right now,
that
guys?
pullback looks pitiful to me on that chart.
That's the thing, right? It's all about context. If you zoom out and you look at a weekly chart, what causes a lot of people to freak out is really just a blip on the radar,
Yeah.
right? So yeah, what's going on, guys? Why are the equities markets pulling back?
Coronavirus.
Yep, that's front and center right now.
Fear.
Is that like when you leave your Corona out in the sun too long and it gets sunburned
And the
and it tastes
lime gets
really
all
nasty?
gross?
Yeah.
Oh man.
No, so let's talk about this. So coronavirus, obviously causing a lot of fears. Obviously, it's a big deal. Yeah, what do you guys make of it?
Yeah, I think it's a serious issue, and it's happening at a pivotal time because this obviously originated in China, and it's pretty much the worst time for it to originate in China because it's the start of the Chinese New Year, which is when a ton of Chinese people are traveling across the country. They're spending lots of money, and they're so it's just from an economic perspective for China specifically, it's just a really bad time for this to happen.
Yeah.
I do think it's going to have an effect on global growth overall this year. It's definitely going to be a headwind, even if it gets relatively. I guess if it gets, I shouldn't say cured, but if it is tamped down a little bit and
It's controlled and it doesn't go like crazy.
over the next 6 months, it's still probably going to provide a headwind to some economic growth and certainly in particular sectors. But yeah, some people I think are worried about a black swan here where this thing spreads to tens of millions of people and millions of people end up passing away from this. Probably too early to tell, but there are some properties of the virus that are a little bit alarming. It seems to spread very quickly. It has a high transmission rate, and it also can be transmitted before any symptoms actually.
Yeah, isn't there like a 5 day
Yep.
incubation period? That's pretty scary.
And it can live on surfaces for up to 5 days.
Mm-hmm.
Yeah. So those properties means it can spread very quickly. There's cases now popping up like U.S., Canada, Singapore, Thailand, places outside of China. And, the U.S. actually still has flights going in and out of China. So there are countries that are still, large countries like the U.S. that are still allowing some travel in and out of areas with infection. So,
Which is
so
scary.
So worst case, this becomes a pandemic of epic scale. And then all of a sudden we have something more to worry about than if we're at all-time highs or not. Yeah. Let's talk about like the medium case or the kind of the base case for this, right? Like, let's say it does get capped, it does get controlled, it ends up somewhere in like the SARS or the H1N1 type level where it's contained. Unfortunately, quite a bit of people die and get sick from it. What does that mean for the markets in a base case? And I know you sent me this tweet that was kind of interesting.
Yeah, so this shows some performance, 6 and 12-month performance after some of these virus outbreak type events, like SARS is up there, for instance. And it, as it shows, equity markets typically on a medium to longer term basis kind of shake these things off as they get under control. The equity markets seem to not really be affected by them. Now, I will say, if you look at short term, these things did typically, like I believe there was a sell-off in the weeks following SARS, and Ebola in particular had some pretty big short-term corrections in the market. I think somewhere between 5 and 10% initially, but then they went on to recover. But again, we were just at all-time highs in the U.S. markets, and there is some questions about global growth. We've seen the manufacturing sector weakness, and obviously the trade wars were weighing on some of the economies last year. So it's just not a great time to have something like this break out. And so I do see this, and I see that hopefully, probably, it seems like longer term in the medium case we're going to be fine, and equity markets aren't going to really feel a long-term effect. But I think in the short term, we do have to be careful to not just blindly buy the dip.
Yeah.
Because I do think there's some shorter term risks. And again, there's some cases here on the tail event black swan type of event where this thing gets a lot worse than any of these that we see on this list.
Yeah, and I see this spilling over obviously like into crypto and other markets. So obviously China's still a pretty big player in the crypto space, and so CoinDesk had this article where they were talking about how this could affect the crypto markets. I kind of see this, again, as the base case. If the base case happens, this could kind of be like the 2008 financial crisis, where a lot of assets initially get hit and then the safe haven assets bounce, like gold in '08, right? Like even though gold turned out to be a good investment after the financial crisis, initially it had that sell off because when a crisis hits, people sell a lot of stuff, right? They just have to liquidate for different reasons, right? They need quick cash or they got to pay bills. I don't care if it's Bitcoin, gold, dollars, property, whatever.
Yeah.
If a crisis hits like that, people need to liquidate. They need to be liquid and they need to pay for things. So, so I could see this being a potentially bearish scenario in the short term, kind of like you were talking about with equities as well. But overall, hopefully it ends up being contained.
Yeah.
So yeah, anyway, let's keep rolling. So what else we got? We got earnings season kicking off.
Yep.
A lot of big companies reporting this week.
Yeah. Last week we saw some bellwethers report, companies like Intel and Netflix. So far, it looks like the reports have been pretty good overall. And if the coronavirus hadn't really hit, I think we would see the market probably still at or hitting new all-time highs because the earnings results have been pretty good for the fourth quarter so far. So we've got a lot more companies reporting again over the next 2-3 weeks. So we'll have a lot more on that in the next couple weeks. But yeah, there's a lot going on in the markets right now.
So one question that we had from the Skill Incubator community was asking specifically about broad market ETFs. So in vogue over the past few years has been the opinion of, buy low fee index funds, diversify, have a mixture of US stocks and international stocks, and then have also a portion of that be in bonds, right? And Nikki, I mean, as a financial planner, this is something that's really popular. And what are the main things that you look at for how to have a balanced portfolio?
Well, it depends on a lot of things. Your age, when you plan to retire, your time frame is super important. Someone young, may have a riskier allocation, have more stocks. But as far as, broad market ETFs,
I think the question in the community had to do with should they be
timing
putting money in right now
Yeah.
into broad market stock ETFs and things like that, right?
Yeah, and it really depends on your timeline. If you are retiring in 30 years and the market's here right now and your dollar cost averaging regularly, then this isn't going to affect you so much in that time frame.
Right.
But if you're retiring soon and you're looking at this saying, I've got, a couple years till I need to cash in these stocks and
All of a sudden timing becomes
I
a
gotta
little
live
more
off
important.
this. Yeah, timing becomes super important. And you may want to be paying a little bit closer attention. But if you're there, you shouldn't even have that heavy of a stock allocation anyways.
Right.
But some people do.
Right.
It totally depends on your situation. So is this a good time to buy? Is that really the main
I guess
question?
so that's a good way to look at it from a long and short term perspective of people thinking about their portfolios. Trav, thinking more tactically now, what do you think is the best strategy in 2020?
Yeah, no, it's a great question because I've had a lot of my friends asking me what do I do? What do I do right now? With the market hit, when the market was hitting all time highs, especially it's do I sell stocks? Do I put more money in? Where are we headed? So for me, I think that again, I think you have to be very choosy about where you're putting money in. I don't think it's the time, or I don't think I don't think it makes sense to just sell all your stocks just because the market's hitting a new all-time high. I think that you do have to be pretty careful. For me personally, I am, putting more money into stocks that I find that are still really good values, that I think have interesting catalysts ahead, and that can outperform the market. But I'm not putting a lot of money into broad market risk. I don't want to be taking on a lot of broad equity market risk, especially coming off a year like we had last year, and given some of the concerns that we have over, political changes this year, as well as, things like coronavirus. But again, I think there are still great value plays in the market where you can put money that over the next few years, I think will do really well. So you just have to pick your spots, in my opinion.
Yeah. I find it interesting, right? Like whenever something becomes really popular, in the markets, I start to get a little worried about those strategies, right? So like, it absolutely makes sense for a lot of people, especially like if you put on your financial planning hat, to have a balanced portfolio, think long-term, don't overthink it, because as the data has shown, people are their own worst enemies, right? And if you try to be tactical and you're not good at it, you're going to underperform the markets. And a lot of people underperform the broad markets, right? But whenever you have such a large percentage of capital going into low fee index fund ETFs, I start to think, why could that be wrong? In a year like 2019, where the markets were up 30%, great. Most people that just bought that and held outperformed a lot of hedge funds. But in markets that are, I guess, how would you look at this, Trav? Like markets that are flat or down, you start to really see where the true talent comes out, or people that are really good at being tactical can outperform that.
Yep, that's right. Definitely. And I guess there is a question too here, like a sub part of this question is, well, okay, so if you don't have the time or capability or a community like ours to leverage to do active investing in a market like this, but you're still putting money into, like, let's say a 401k every month, where should it go? One place that I would probably be looking is international markets versus like developed U.S. markets.
I was just going to bring that up.
Yeah, nice. Because when you do look at like relative value, the U.S. markets have been very strong. They're trading at, near all-time or near multi-year highs in valuation.
Yep.
Whereas international markets have lagged, and there are a lot of international markets that look cheap. And so I think potentially looking at some of those type of funds or ETFs might make some sense here.
So maybe something like this, the emerging markets ETF, or do you
That's emerging.
Yeah.
So you can go emerging or developed international.
So I think SCHF is more like Japan and more established economies.
Yeah, and I would actually look, so you would know better than I would because you focus a lot more on ETFs, but I would also double check when you look at some of these ETFs, look into what they're holding and what percentage are in certain countries, because some of these ETFs, you don't get what you think you're getting.
Yeah.
You may end up with a 30% allocation to China if you're in one of these emerging ETFs.
Yeah, I think there's one I was looking at today, actually. I was trying to get away from China and trying to find, I was actually focusing on emerging. All the emerging ETFs have China in them, but the international ETFs can have, Alibaba and some China stuff in it too.
Yeah.
So I was trying to find something that was like emerging, but it didn't have China in it. And I came across a few things that looked really interesting and had some India. And but yeah, you have to know first you have to know if you're duplicating countries, because you could be in an ETF that has China, and then you could buy another one thinking you're diversifying internationally, and it's got China in it too. So you have to really pay attention to not only the sectors like financials, the different sectors, consumer goods and stuff, versus look at that, and then also look at the countries that the ETF is weighting. Is it weighting China more than it's weighting, other Europe or whatever it's in?
Gotcha.
So,
and would you guys? So, I want to get your opinion on this. Would you try to be tactical in a way of like trying to guess which economies or which areas or which sectors internationally are going to outperform others? Or like if you look at like, so we just went to ETF.com and then looked at the SCHF. So this is the Schwab. What do you call this? Schwab International Equity, right? And then if we look at the holdings, you've got about a quarter in Japan, about 15% in the UK, then France, Switzerland, Canada. So these are more established economies, right? And then you've got financials at about a quarter of the holdings. You got industrials, consumer cyclical. So like, to me, this looks like a pretty well diversified. Do you guys like something like this, or would you try to get even more tactical or more pinpointed with your selections?
I do like something like this. Another one to look up is VXUS. So that was one that the reason I liked that one is because I believe it's developed international, but it's also got some China in it, some, Alibaba and Tencent. I'd have to look up the exact stats of it, but that was one that, so the one you just had up, I don't think I saw any China in that one.
No.
But this one,
So this
I
is
believe
Vanguard Total International.
Total International. This does have some China in it. I don't know.
It's got Alibaba as the biggest holding.
There, yeah.
Yeah.
So
okay, so
that's
even
the
though
biggest holding
yeah,
in the whole ETF is Alibaba.
yeah, and then you got Tencent in third place.
What was the number one holding in the
It is
Schwab
relatively
one?
diversified, though. Even the largest holding is still only about 1.4% of the portfolio, which isn't too bad.
True.
And that's the idea with the ETFs. They're all going to be pretty diverse.
I would say, like, for me personally, like, if I have a specific view on something, like, let's say I'm a strong believer in the Indian economy over the next 10 years, right? Then I'm going to go look for an ETF that can be a pure play on that, if there is one. In some cases,
like
there
the
isn't
Nifty
one.
50.
Yeah.
There's
or
a IND.
Yeah,
I just looked at it
and
today.
MSCI has some of these country-specific ETFs that you can get exposure to sometimes. So that will occasionally be an option. Let's say you're bullish on Eastern Europe, you may want to go play it that way, right? If you don't have a specific view or some insight that you think is going to play out from an investment perspective, then I think these broader international ETFs can be a good option.
Interesting. Yeah, and I'm sure there's some people sitting at home going, why are you guys talking so much about international stocks? And one thing that I think is really prevalent is the home country bias, right? Where people are like, well, I live in the U.S. I've only ever thought about investing in U.S. markets, or I live in the U.K. Or whatever, right? Like, let's talk about that a little bit. Like, why would you want to be diversified into other countries? And does it make sense to do that?
I mean, valuations internationally are lower than what we're seeing in the U.S. stock market. That's one reason.
Yeah.
So there's more opportunity for growth.
I tend to think that a lot of the international markets are less competitive too, because the U.S. has got so many funds focused on trying to generate alpha. There's so much competition, and in other markets, oftentimes you'll find that the information flow there's less competitiveness, and so there's more opportunity for alpha in some of these international markets.
One of the arguments for emerging markets is that we're starting to see the middle class emerge at higher rates than we have in the past, so that potentially could be bullish for those emerging markets.
So what are the biggest emerging? Obviously China, India.
Yeah, I think
even Indonesia,
Southeast Asia. Yeah, I was going to say places like Malaysia, Indonesia, Vietnam.
So basically the largest population areas, right? That's going to have a big effect on the world economy. I mean, India and China, number one, number two, right? And then you got Indonesia, which I think is the fourth behind the US as far as population, if I'm not mistaken. Like, that's a lot of people coming into the middle class.
Yeah, exactly.
Yep. People have started to focus on and think about Africa a lot more as well. Africa is often, a lot of the countries in Africa are considered frontier markets still, but there's a lot of interesting development happening there. And there aren't as many direct investment ways to play it publicly yet. There are some, but as that opens up, I think a lot more people are going to turn their attention there too, potentially. So Africa is an interesting kind of frontier market or frontier continent to actually look at. Again, it's another one of those places with population, massive populations in some of these countries. Actually, the demographics are pretty interesting. A lot of them are very young demographically, a lot of resources. So
I think there's about 1 billion people on the continent of Africa as well.
Yeah.
And 50 something countries like that. Yeah. It's a lot of people too. Why don't we quickly define what the difference is between frontier, emerging, and then just, I guess, regular foreign developed. Like, how would you guys describe that?
Yeah, I mean, I think developed is just, large like G10, G20 economies that have, good governance. They've been, growth rates are slower, but, with much larger bases of GDP.
So maybe risk is a little lower because they have, and you can make an argument for a stronger rule of law.
Yeah. Yeah. So those kinds of things. And then when you get to, emerging or developing economies, it's places like India and China that have large potential, that are growing quickly, but still,
there's still some risk.
Yeah, still, things like rule of law and governance risk or geopolitical issues. Places like Russia would be another example. Some countries in South America. And then frontier markets are those that are really just, emerging as, potential, high growth. Something is actually now allowing them to break out of maybe a long period of, stagnant or declining growth. And so, those are places that are opening up and starting to allow foreign investment and things like that. So, again, countries in Africa, there's few countries in South America, even some still in Southeast Asia. You visited
Myanmar, yeah,
which recently
opened up. I think it was 2012. Very much still like a money under the mattress type society. Nobody trusts the banks. There's a lot of smart people there. I had a friend organize a kind of a pitch fest for me where local entrepreneurs came in. A lot of really hungry, really smart people there. And it's interesting when you show somebody in those areas like the power of Bitcoin combined with the power of the internet, how listen, you don't have to be a farmer or a fisherman. You can put up a website, accept digital currency from anywhere around the world without your local government stealing it from you. And you show them how you can make in a month what would take them many, many years doing what traditionally, 7 to 10 generations of their history has done. That changes the lives of a lot of people. I think there's something like 50 million people in Myanmar. So imagine as that starts to spread over the next 10 years. And to me, it very much seems like maybe Thailand, 30, 40, 50 years ago. So there's a lot of room for growth there too.
Yeah.
And wrapping it back to that question of, is this a good time to be buying the broad market, the U.S. broad market? You can diversify in so many ways, and if you just keep your time frame in mind and look into having something balanced, that if we don't, what if we don't see a big correction in the S&P 500 and you're just sitting there waiting? But what if we do? You have to kind of prepare yourself for both sides, and diversifying, if you're in some type of long-term passive investing portfolio, maybe you don't really need to be thinking about it in that much detail if you have that time on your side and the ability to go into different areas like emerging markets and international and higher growth areas. That's why for us, I think we like to have different capital buckets, right? Like over here, I have my balanced portfolio long term that I try not to overthink. Then over here, we have a tactical strategy where, in a say 2020 is completely flat for the broad markets, but in our tactical stock portfolio, we can earn, 20, 25%, right? Also have crypto, also have venture, also, to me, that's just the no-brainer way to do it. If you have a large enough capital base to do that. If not, you got to start somewhere. Yeah.
Right.
And there's nothing wrong. I mean, there's nothing wrong with using both strategies, with having a passive strategy and something like what we're doing in the community, more active and being tactical. And there's nothing wrong with that. If anything, it's giving you, more to work with, more of an edge, and you can really benefit from that.
Awesome. Well, I think that's a great place to leave it off. Guys, thanks for watching or listening. Just a couple of things. So next week we are headed to the mountains to go skiing. We're going to do a full episode of just Q&A. So this week, by the time this episode goes live, you guys should see the We Talk Money website is up where you can submit your questions. So if you guys have any questions around personal finance, investing, crypto, stock market, venture capital, entrepreneurship, anything money related, go ahead and submit that. You'll also get on the notification list, and we are live on iTunes and Spotify now.
Woo-hoo.
Yeah.
Nice.
So hopefully you guys are enjoying these episodes. The feedback has been great from you guys so far. So let us know what we can do to improve, what topics you really like to hear from. And again, go to wetalkmoney.com, submit your questions, and we will see you next week in the mountains of Colorado.
Ciao.
Take care, y'all.